Welcome everyone to the Kendall Report. Give me a sound check, because last night we had some issues with the sound. It looks like it's really good tonight, so let me know that you're hearing everything very strong. Anyway, welcome, and we are live, and it is Tuesday night, the first day of the week, and we're just seeing a continuation of the carnage. There's quite a bit to talk about tonight. It's really, everything's about the dollar right now, and if you saw the title, you'll know that I said, will the King Dollar destroy the world? And it certainly is. Got a lot of folks running around. I'll get into the details here in just a few minutes. But, you know, the only economic report we had come out yesterday was ISM non-manufacturing. Came in like 5 points better than expected. But nobody was caring about any of that. It had everything to do with the dollar, the treasuries, all of that stuff, which is what my focus will be tonight on what's going on here. I mentioned, and I'll show this in a minute, I did see something, I think on Twitter, on comments on the YouTube channel somewhere. Somebody wanted to know what the significance of that 40-40 number that I talked about last week. We needed to close above that on Friday, which we obviously did not. That was to maintain a intermediate bias to the upside. That's all gone. As you know, on August 23rd, we exited our long position on the S&P. We've been having no long positions on any of the indexes on a short-term level. And then on the intermediate, there still was a long trade going on. It was underwater a bit. It let that go on Friday's close. So it's gone because we closed under that 40-40. So hopefully I answered that question. I saw a number of questions about that. So I talked about this last night. The ECB meeting will be on Thursday, and the expectations are for a 0.75. Probably going to get it if you look at the currencies. And I'll try to cover, we're going to probably focus on the dollar and the yen because there's lots of things going on there. The Bank of Japan is in buying bonds as we speak. They're trying to support their bond market, and they have not made any intervention in currency, but I'll go into more details on what I think is going on there from that standpoint. But we're just not seeing any type of traction, anything that looks like there's a bottom in the equity markets. Just everything's got a hole in it right now. Even the oil, you name it, everything's going down. So all assets are dropping. It doesn't matter what it is. And it doesn't appear, at least at the moment, that we're very close, but there is an event that could happen that could change this for the short term. I don't have a lot of high hopes at the moment. It looks like I talked about some key numbers on the monthly charts last night, so we'll kind of review that again as we go through tonight's broadcast. So there's really, as far as any economic news right now, there's nothing going on. It's all being driven by the action in the dollar and in the treasuries. And I'll show you, we just had our second, almost in a row. I think we had one Thursday and then we had one today, RTX sell signal on the treasuries, but there's just selling going on crazy in the treasuries right now. So very interesting. Let's go ahead and let's dig into the database, which still is amazing me, but I've went through a lot of stuff, and I'll just go through it here just so you can see what's going on. It has very little to do right now with what's going on in the indices. Typically, I can translate what's going on in the short-term database to some stability in the markets, but that's not the case, and we'll get into it. Let's go ahead and take a look at the database. And 1 second here. Yeah, I'm just going to have to go full screen. It's set up there, so hopefully you'll be able to see this. Let me just go full screen. So right now we still have 53.35% on the bull side. There are 4 sectors that are still long. I'm going to go through a little bit of detail here tonight, but we're still seeing attrition. We had 768 sell signals, only 80 buy signals. We have negative rotation in database across the board. Right now, 7 out of 10 symbols in the database on the intermediate level have no position. I'll show you a couple strategies out there. For the most part, we're 60, 70% in cash across the board. We're not getting any traction at all on any of these strategies for obvious reasons. Markets are still going down, so there's no stability to be found anywhere. But we look at these sectors down here, it's somewhat interesting. Let me just pop up. I just want you to see what's going on here. And I'm going to draw in a couple things here just to help you follow along, make sure we're all looking at the same thing. But this is right here is bear with me 1 second. So right here where there's a green arrow right there, that's where we got to buy for this sector. And this is the consumer's cyclical. So we went up and we're setting up, and this is more or less the pattern that's setting up everywhere, is potentially a right shoulder. But we're seeing PPM1 turn up a little bit. This is on daily, but we still have a lot of downward pressure here. So there is a lot of work to be done with this index before it can even try to bottom. Right now, it's still actually in a massive downtrend, and nothing there that's looking like it's going to make any kind of turn at the moment. But I just want you to see, this is what I'm seeing on a lot of symbols where they've went up and they're retracing down, and we're not getting we're not seeing any type of point where we're selling. There are, like I said, there's 4 of them. Energy has been long for 15 days. It's up 2.4%. So all these have very small gains. There's nothing big because we've rotated out over the past 2 weeks. You'll see where my cursor is right here. Let me highlight this. There's been right now 5,000 symbols sold in the last 2 weeks. So we've had a ton of selling because we were up to around 84% bullish. So we've been selling a lot. There's just a lot of symbols that have that same type of configuration in there that I was talking about. And for instance, like we've got energy strategies here that are still 77% invested. They're up 8%. This is something I just built a while ago. There's just a lot of strategies out here, and I showed you this last night. Most of them are down 3, 4, 5% on the year, while the indexes are down 17 to 24. So we haven't owned a lot of this stuff. It's just basically setting up. We're just hanging out in cash. Like for instance, if we look, let me just grab this one here just randomly. Right now it's 68.93% in cash. So just no ownership here. We're just, the equity curve is backed off, and we're just trying to maintain things with a few symbols that are long. We look at open positions. I'll just show you a couple things here. There's 3 positions that are negative just slightly. We've got Humana up 19.53 here, up 36% on FactSet Research, FDS, and the other one has got up 0.92. But this is how this, I've been going through this database in great detail, and this is how it's all set up. There's a few trades that are down underwater a little bit, but like I told you, the way I see the world is how the portfolios are positioned, and all of these are, like I said, they're 60. I would call it 40 to 60% in cash. From that standpoint, there's a strategy here. If I came down here and I put on the I'll just leave it up on the screen right here. This is the ETF hack. You can see this portfolio has done wonderful. This is the XLE. So we took all the symbols out of XLE, 21 of them. There's 16 of the symbols are long right now. And if we look at the open position run, you'll see that for the most part, once again, there's decent buys and profits in these. And the ones that are underwater are 0.3, 0.22. There's nothing big underwater here. Everything's less than, here's one. The biggest one is OK is at 2.39%, but that's the biggest loss in this whole book here. And it's still up right now. When we look at what the summary is right now on the portfolio, it's still up 23.58%. You can see the equity curve has just been basically straight up. Now we did this hack in January, early January, and so it's from the January point, it's actually up quite a bit. We only had 2 small losing months. Right now, September's down 2% is all on this strategy. But I want to show you this because it's just fascinating to me the way basically the database, that what it's holding, it's picked out all the cherries on the tree. It's got exactly the ones that you want to own. There's nothing that it owns that's underwater big. And that's best I can tell. There's a lot on a short-term basis. There's just a ton of symbols out there that look like this. When I go over to research and go back to the daily, what I'm seeing here is the 53%. There's 8,500 symbols that look like this. I went through a whole bunch I'm just showing you a couple. I don't want to spend a lot of time on it, but I went through a lot of portfolios. We have over 10,000 portfolios that get run every day. And they all look similar to this. They're even down 3 or 4% on the year. Some are positive. But when you look at the order book and what it's holding right now, none of these trades are big underwater. So it's an interesting setup that we're seeing here. And I will tell you that normally when we get declines in the markets like we've seen, we went from 43 handle all the way down to the 38 handle. We're seeing mass selling in here, but this it's been an interesting scenario because what's happening is we're just getting absolute. I guess the best way to put it, the system's doing its job because it owns the right symbols, and nothing's really getting hammered. I'm sure there's a couple bad trades out there, but they're very few. I went through about 30 portfolios earlier and just looking at things as I was getting ready for the show tonight. So the database, 53% long, sounds like I'm bullish. I'm not. I'll talk about the technicals. We did talk about the 0.618 retracement, 3,900, all that. But overall, the portfolios that I'm looking at here on a short-term basis are doing well. And like I said, our intermediate, if I click over here to the weekly, it shows you is 32.9% bullish. So basically 7 out of 10 stocks have no position. Now, that's stocks, ETFs, mutual funds, bond funds, you name it. That's the works. It's the entire kitchen sink there that we're looking at. So I think it's interesting looking at how the world is pretty, how the database is handling this. So we've never gotten over 35%. This database was down to about, I believe it was 11 or 12% bullish. Going back into June, we got a little traction, about 20%, but still well under, I think 35, 36 was about the top end. So just want that perspective so that this is exactly what you want the system to do, is to be able to pick out all the good stocks. And not every stock is going down. When we look at the indexes, we have a different feel. So I just want to point that out. Like I said, it's every decline, every situation is different. That's why I talk a lot about be careful about comparing a lot of, when you're looking at indexes, that's what it is. This channel is not about indexes. I talk about them in perspective, and we do that, but it's really about the products portfolio. It's about Portfolio Expert. It's about Wavetech. It's about our institutional clients and our retail clients now that are using this product to manage their money. So let's go ahead and let's take a look at the S&P. So as we look at the S&P, as I mentioned, right here, you'll see on the pop-up on the screen on 8/23, we sold. It shows sold at 41.47. It sold out of that trade. It went into the trade back on 7/18 at 38.78. So it's been out. We're just seeing that this is what I think is interesting about what's happening here. We're not getting deep acceleration, collapsing type move. We're getting this little rounded bottom here. PPMs are still very negative, minus 0.61, 0.26, and PPM 3, which is interesting to me, is still positive at 0.52. So what typically when you get this type of formation, the market wants to rally back into the moving averages. And so we could see a bit of a rebound. Those numbers are up here way at 40.73 is where the 40 is right now. And it won't take much. And this is what I was setting you up for just a minute ago. It won't take much for the market to close up. Maybe it closes, if we could get a higher close over 39.80. It looked like last Friday, before the big reversal, it looked like we might get a higher close. We traded up into the 4,000 handle and then just crumbled, as you know. And so now we're back down, but what's happening here is we're not getting that big acceleration down in the PPMs. So this is one of those drifting patterns, and prices have gotten low enough now that, just here at a 0.14 handles, all of a sudden, is a 0.38 decline. So percentage-wise, it's still definitely declining here, but we just got this downward slope. So I'm just looking for some type of potential reversal from here. I went through the monthly last night. I said if we did not hold 39.05, which we did not hold it, that we would probably see 38.50. That would be monthly low. And we'll look at, I'm going to bring up the weekly chart here just so we can get some of the numbers. And I do have, let me go full screen. If you look at the pop-up on the screen, you'll see that it closed out the position at 39.29. We didn't get we needed a 40-40 buy, 40-40 or higher to keep this position in. It actually bought over here at 41.37, sold out at 39.29. The previous trade to this one was along at way back in November of 2020, and a bunch of you told me I was crazy then. That trade went on at 35.37 and came off up here at the 43.80 was where that trade came off. And this was a elongated move, as we know. So 21 is 20. As we come into 22, we've just seen nothing but lots of carnage in the markets, plenty of pressure on the downside, and we printed down to 36. So right now, this 36.60 is still the key level on the charts. And as I mentioned, let me flip over to a monthly chart. The monthly 38.50 is S1, R1 40.62. So we haven't even done S1, R1 yet. Of course, it's a couple days into the month, so that wouldn't expect to see much. Still think we can get an S1, maybe an R2 41.80. I think there is some rebound as far as getting above back into 43.20s or anything like that. Looks very unlikely. There is some pretty decent deterioration here of the PPMs on a monthly basis. So as we come in we finish this quarter, as we get a little closer into the end of the month, I'll start bringing up the quarterly charts and see where we are, see if we hold here, we print down to 38.50. If we get through 38.50, the next number is 37.30, 36.13, which is a retest of the lows. That's what's in play here. And like I said, the scenario that looks like is building right now is probably at least for the potential if we hold 38.50. If we hold it, then we're looking at S1, maybe an R2. So that would be 38.50, 41.80. We typically will get a bounce in these markets, but if we just roll over big, the extreme is going to be probably back towards the 36.60 and a retest of that lows. Like I said, we're not getting any traction in database, nor should we be. In fact, we're continuing to see profit taking happening on a lot of these portfolios that I was just talking about. Like I said, last night we had for tomorrow's opening, we got 768 sells versus only 80 buys. So it's almost a 10-to-1 sell versus buy. So there's lots of attrition going on internally in the markets right now. So let's go with the NASDAQ next. I'll stick with monthly right now. We're coming right into, I think, a significant number here on the NASDAQ futures. 11,844 is the 40-month moving average. It is still got a positive slope of 1.02. That's pretty substantial upslope, and that angle of attack is pretty substantial. We also have here at 11,989, we have a pivot that's there as well. So that you'll see this red dots going through this pattern. That's still over here at that number I just mentioned, 11,989. So we're printing just below that pivot right now. So it's definitely a dangerous pattern. If we get through this level, we look at just from a market grid viewpoint. This is monthly. You look at the next level after that is 11,446 and 11,000 even. It gets pretty ugly very fast from here. Let's just go down the spectrum real quick. We'll go to the weekly. Weekly also has a pivot here, 11,584. So far, the low's been 11,921 this week. So, like I said, it's interesting because PPM2 is trying to turn up. PPM1 is turned up. We're still positive at a plus 0.28 on PPM1. So there's we're just going to call it about a 40% probability that we could get back to 12,006. That seems like a really tall order at the moment. That would be substantial move in this configuration. I don't see that happening, but that upward slope here on the PPM1 is suggesting that we could get something like that. Going to the daily, same kind of formation that's in the S&P, just kind of this drifting formation. PPM's trying to stabilize here. It won't take much. What we really need to do is, on all of these indexes, is to close back above the 10-day moving average. That's 12,342. That's a long ways from here. And right now, that downward slope on PPM1 is a 0.78, so there's less than a 10% probability for the market to get back above that level. So we're definitely got several more days of even this drifting decline coming into those numbers I talked about on the weekly and the monthly, or just sideways to burn off some of this downward pressure. And if we can get PPM1 and 2 to start to turn up here, then maybe we get the close above the 10 and maybe get sandwiched and run back towards the 21 and the 40. Now, this is daily, and one of the things that hasn't happened yet, I thought it was going to happen today, we get a negative cross where the 21 crosses the 40, and typically that will set up at least a minor low in the pattern. I don't, until we get some of these closes and get something positive to happen here, there's no signs that that's going to happen, but it is interesting the way that things are set up here. Like I said, it won't take much. Probably have our first, I think maybe it's been 7 or 8 days since we've closed higher. It's been quite a few. So we haven't had one higher close for a while. And with the Dow, we're going to cover the Dow here in a minute. With the Dow acting like it is, it's going to be difficult if the Dow doesn't turn around. This is the RTY daily. It is trying, like I said, these PPMs are trying to stabilize, but they're down big time. These are big downtrends, basically telling us 1847, dropping about 20 handles per day, 1820 tomorrow, and then 1800 and so forth. The next couple of days, there's going to be major cap on this market. There's plenty of up resistance on the upside. On the downside, let's go over to the weekly just to see if there's anything underneath this market that could stabilize it. We're 200-week moving average. We've traded through this going back earlier. This is the weekly. So back in 2020, we traded below that. We've been above the 200-week. The 200-week, the very bottom indicator on this page is the Wavetech 200. That tracks the angle of attack for the 200-week moving average. It's still positive at 0.068. It's still above its first second derivative. So there's a reasonably strong probability that will hold along that line. That number's right now 1772, so we're trading right on it. So if it's going to stabilize, this is going to be the place to do it. Break through that level, and we could get a whole nother swing lower, and markets will get really ugly after that. So this is kind of the point of no return where we're at here right now. And this is the case with all these indexes, 3850 on the S&P and those numbers I just mentioned in the NASDAQ. Those are critical numbers. We break through those numbers, it's just going to be more downside for sure. Couple interesting things here on the 10-year. I mentioned this last night. We had a high target of 3.30. We actually traded through that. We traded to 3.35. There's two more fib projection numbers, 3.59, so 3.6 and 3.78. Those are two valid projections. This is the weekly chart that we're looking at. We're seeing massive acceleration here. PPM1 at 1.54, PPM2 0.83, and PPM3 2.05. So this is a massive uptrend that's not going to turn around. My expectations were that we would hover maybe back and pull back into some of this range. We're also already, this is weekly, we're already right at the extremes that are being projected basically on what's going on with the normal ranges that happen. And you can see for the most part, actually, it's around only 12% of the time the market will get outside of those ranges. You can see we've had, especially on a weekly basis, we had one back here on 6/17 when we printed up at 348, and we printed a little bit above the other day. So this week we're coming right into the extremes again. Typically we'll hold in there. You can see just looking, there's only a couple places where the markets will, where it will exceed those projected limits. It's pretty accurate. The market grid will give you some really good feel. If we go over and we'll come down and look at the daily, we had RTX sell on 9/1. That signals a 1 to 2 day sideways to down. The next day we fell back into 319, so we did come down. We got the surge yesterday. Today we'll say Tuesday, so we did get an RTX sell again. Suggests that we should come into maybe S1, S2, which is 3.31, 3.29, so right around 330. And the extreme that on the downside today is 3.24, which looks pretty extreme. I think we'll probably hold them around that 3.30 level, but we should actually be negative just for a day, maybe two, if they can stabilize. We're also seeing here on the daily that PPM2 is up at 0.80, so there's a lot of upside. PPM1 is at 0.98, so the support at 3.13, that number is popping up. Give me a second here. Yeah, it's going up only about 3 basis points a day, so it's going to come in around 310, 312 area, and that's going to be the minimum of the downside in yields here. But we should see a stabilization. Maybe that means we'll see some things happen, and from the standpoint of maybe backfilling a little bit. But just like I said, we've got valid fib targets now. Going back to this weekly, let me bring that back up. Valid targets here for 360. I'll just round things off, 360, 378. So there's some big numbers out there yet, and that would take out that high at 348 that we did back in June. And if we get there, that's just going to really jack up a whole lot of stuff for anybody, especially for the tech stocks and the like. So we'll see what kind of action we get over the next couple of days. I'll be talking to you folks tomorrow night. We'll stick with the Dow. If you recall, in the last couple of weeks, I've been talking about the projection for the Dow. Minimum is 111.68, and we're getting very close to that. We printed up today to 110.60. We're about $1 off of that target. You can see there's 3 fib targets. The next one up is actually for 115, 118. If we got there, I don't know what would happen to the RMB, the China, Japanese, everybody. This would just destroy everything and really start to cause some major dislocations. Now, there's a couple things that are going on here in the world of currencies, as there's a lot of illiquidity. There's lack of liquidity in these swap lines with the Fed. The Fed's going to have to do something, and that's part of what's happening right now. Is they're just, there's the market's very tight and it's getting bid up, and it could get very easily, if I would suspect that all these central bankers are talking to each other. The Fed's talking to everybody, trying to figure out some kind of a tactic. And we've seen in the past, I'm not necessarily saying it's going to happen, but we have seen in the past that the central banks get together and they do some unified effort. It just has to, I don't know what it's going to be. If the Fed's just going to increase the swap lines, try to get some more liquidity in there, what's going to happen from that standpoint? It would be highly technical, especially when you've got a lot of small countries that are just on the ropes here, that are just getting destroyed by King Dower. And this gets pretty ugly very fast, because now there's challenges that start to come in across the board. So just kind of tie this together, talk a little bit about the ECB's action on Thursday. They're probably going to do 0.75. Europe has got so many issues economically. I don't know how fast or how hard they can push this. And I don't believe the Fed's going to pivot. I really don't. I believe they'll stay online here. Sometime this week, before the end of the week, the next couple nights, I'll go back. If you recall me talking about what my expectations are for the yield curve, we're starting to see really almost a flatline expectation if the Fed funds ends up getting up to around 4%. Right now, we've got the 30-year, just looking here, 1 second, 30-year 348, so we're basically 350. We're looking at basically a flat line. I drew a yield curve for you last week, I think it was, where I'm looking at the high end on the left-hand side, the Fed funds, and everything kind of just sloping down a little bit. The best thing for the Fed is a steepening yield curve, not a flattening, not being set up like that. But if it does get into the angle of what I think it's going to end up, because we're starting to see some serious demand destruction in a lot of different areas. So this is becoming more and more critical from the standpoint of what is going on within the structure of the bond market. And this is affecting the US dollar, these dollar swaps, everything this is all related, all tied together right now. And the flows here are going to be really important. And I talked a little bit so we're mixing and talking about both treasuries and the effects in the dollar right now. But the treasuries are very illiquid right now. And so when you've got the Fed letting the runoff happen, they're up at 95 this month. All of this stuff is hitting all at once. So it's going to be interesting to see how these folks all get together. there's got to be a party going on a conference call, on a Zoom meeting somewhere over the next couple of days, I would suspect, as there's going to be potentially some serious issues that could come out of this. So this is one of those moments in time that you can expect to see something big from all the central banks. I think folks are really getting very nervous, and I saw some of the postings for the markings for the yuan and other things. It's getting critical. So we're right at that point. So we'll see what happens. I'll do my best. If there's anything I see or hear on Twitter, I'll put something out on Twitter as far as that goes. The other market that started getting very interesting, I just mentioned, and I used the term in demand destruction. We look at crude oil. I think the short-term crude is starting to get really negative. This is a weekly crude. We're trading below that 40-period moving average. I thought we would hold that. So far, we're still at a 0.90, so there's decent support. But when we look at ppm 1 and 2, we're negative, minus 2.05 on ppm 1. ppm 2 is at a minus 0.59. It's big downward pressure here, lots of overhead resistance at 92 all the way to 98. Anything up there now is a sale. And all that we have to look at from the standpoint of crude right now, since we're below all these averages on a weekly, is really coming down to looking at the market grid here. And right now we've had a low of 85.17 for the week, so weekly graph, and 84.70 is S1. So we haven't printed S1. S2 is 82.28. I don't think we get much below an S2. Anything's possible. If the dollar keeps getting stronger, that's going to definitely put some pressure on this market as well. So everything is related right now to the dollar, what's going on, and whether or not they can get some kind of stability in these swap lines and things that are going on. But this is affecting everything, and the downside could be pretty substantial. This is just looking at the formation that's here on the weekly crude. For the last couple months, it looked like we were going to hold along that demand line, which was the 40. Now that we're seeing the breakdown, we're seeing the acceleration on ppm 1 and 2. This is just telling us there's a lot of downside here. And how ugly it gets, I think, really relates to what goes on with the dollar from that standpoint. So that'll be the thing for you to key off of over the next several days. Let's go ahead and take a quick look at the daily. Daily's got a minus 1.02 on ppm 1, ppm 2 minus 0.23 and minus 0.20. So we're in downtrend across the board on the short term. We're obviously down 124 right now, 85. You heard the numbers I'm looking at from that on the weekly, and that weekly chart is going to be the dominant chart to keep an eye on. So next market, this is daily gold. I'm actually shocked. I'm still shocked about gold that we're not seeing much more downside than what we're seeing. Let's go to the weekly. All these charts, we're starting to see an acceleration downside, 0.76 on ppm 2, ppm 1 at 0.64. We look at the market grid. So far, we printed a 1703 low, and S1 was 1710, so we've taken that out. Next level, 1696, 1680, 1670, and we also have some live downward fib targets down here The minimum target 1682, and then target 2, this is a weekly graph, target 2 is for 1598, 1547. And just to, once again, the Dow were to print anything above that 111 target I talked about, we get above there, we print anything toward that, and 115 is the next fib target on the Dow. That would just be a disaster. This market will absolutely collapse. There's no doubt. And I've talked about this a lot over the last several months, is it's just like it's defying gravity even now. I think it should be much lower now, and there's just a lot of gold bugs out there. People want to own this, and we're the acceleration that we're starting to see is kind of a mixed bag, because PPM1, this is weekly, is turning up, but it's still negative, and PPM2 is accelerating down, which is really the primary trend. But the resistance is a number of levels above here. You've got 1750 is just a ceiling. No matter what would happen, you saw 1750, you'd want to short gold. I don't think you're going to see it. I think, like I said, it's all about the Dow right now. The Dow follows through and we start to see a collapse on things, that'd be pretty good. I actually realized that when I was talking, I meant to go through the yen and did not. So I think what I'll do is just tie that together. Let's take a quick look at the yen, because I do want you to see that. There's some interesting things going on there. I apologize for buzzing by that. So there's a couple things that I want you to see here. This is the Dow yen, 143.68. There's some fib targets that are out there right now, 143.42. So we've hit that first fib target. That target was actually started calculating back on the 12th of August. This is where these numbers came from. So this is the Wavetech fib tool. This is the one you get with the indicators. This was projecting the yen to come here. And I remember talking about this last time. On the downside, it went right into the fib target 3. We spiked through it and got a reversal. And that was the beginning of this pattern we're in now. The next level up over 143 is 148. And that would be the best way to call that would be the Dow going to 115, the Dow index going to 115. And that would probably, I'm back into currencies here, but it's related to what's going on with gold. As long as this keeps going like it is, and maybe it's going on. I know somebody commented, if you own gold and British pounds, the pound got hammered as well today, but they've got new leadership there, and that didn't seem to go over that well. Those of you in the UK, you can comment if you will. But the point is that this strength in the Dow is what's really dominating every trade almost that's going on right now. So this is all Dow-driven type action. All right, the final market I'll cover tonight is Bitcoin. Bitcoin's back down 1,296. So finally it's starting to catch some things in spite of these positive numbers. It's been in the same scenario as we've been defying gravity here. I've used that term covering gold and Bitcoin. It continues to look incredibly weak here. The low was of last week, 19,556. Right now we're 18. We're 1,000 below that right now. We're looking at 18,555. There's no downward projections, but let me flip this over to a daily, see if there's anything showing up there. Not yet. We're well below the the market grid. Let me just fix this scale just a little bit so we can see the most recent action. You can see this. We hit the 10-period moving average. It was down 1.43. That number was 19,965. The high was 20,022. So we went right up to that. Got a rejection off of there. Now we're below the market grid. This chart closes out at midnight Eastern time. So when that happens, we should get maybe some sideways, some stability for a day. But like I said, it all comes down to the same hypothesis that I've been talking about all night, which is the dollar. That's all that. I'm not sure there's anything else to watch when it comes to that. So it just is what it is right now. This is the dominating factor, and it's the dollar and it's the treasuries. But I think even if treasuries back up a little bit, there's issues going on with dollars and cash flow in the world. And I'm just going to finish here just talking about this, is that what we're seeing here from the standpoint, this is what happens when this has a lot to do with the war in Ukraine, has a lot to do with disrupting the energy markets, especially we know what's going on with Russia shutting off the nat gas, all of this stuff that's going on. There's a lot of talk about, the Middle East has a lot of nat gas, but guess what? They use most of their nat gas that they produce. They use a large percentage of it. There's not much overflow. I think they produce like 24, I don't know what it is, billion, whatever, per month. And Russia's doing 22. So they've taken Russia out, and there's not enough to replace all this. We know this. I heard earlier today that there is Poland. I may have these countries wrong, but some of the old Eastern Bloc countries, guess what they're doing? They're buying nat gas from Russia. And so it'll be interesting. I made a comment to somebody earlier today. This will be quite controversial, but I'll say it anyway, is that the only thing that's going to reverse all this stuff that's going on, if they somehow find a way to get a compromise on the war, get some kind of agreement, and the flow of nat gas gets flowing again. Probabilities of that, I think, are very low. But if it happened, it would disrupt just about every market thesis that's out there right now. If that happened, that would be earth-shaking. So we're at this point, folks. I guess what I'll close here. We're at this point where there's so many different flows of things that are going on that could have major effects in what's going on with cash flows in the markets, the economies, everything. This is probably one of the most critical points that I've seen in a long time. And I would tell you, it's not, I'm trying to come up with an analogy on the cuff because this is a live show, is that it really comes down to these moments in time and how things are handled. And I was talking to a friend of mine in Switzerland earlier today, and I said something to him that I think is important to share with you. It's a quote from my brother, actually. And he goes, when things are this screwed up, just know there are millions of people trying to fix things. So there's plenty of people trying to figure out what the right solution is for this particular occasion. And it's not always about, shorting or buying the market or profiting. There's a lot of dislocations of products, supply chains. We all know everything that's screwed up. There's lots of people that have incentive to fix these things, and whether they fix them or not on a timely manner, or whether we just get broken and we have a complete black swan event, that's certainly possible. And I know from in this presentation I'm talking about tonight, from our portfolio standpoint, we have minimal exposure to the markets right now, so I feel good about that. But I am very nervous that we're at this inflection point. So, like I said, don't be surprised that all of a sudden there's some joint statement by, because you get the ECB, on Thursday have their announcement, I'm telling you that we could get some coordinated, some event, whether it's swap lines increase, something that needs to build this liquidity, because there is a massive liquidity hole happening. And I mentioned last night that I would talk about this a little bit, but we definitely have lost in the equity markets. We've lost a lot of liquidity. There's not a lot there. And I'm not sure what's going to fix this right now. Maybe if these genius central planners can come up with something that can convince all the market players and that they've solved some short-term issue or something, maybe that would do it. I just don't see what it is right now. I can't come up with any kind of solution right now. It looks sometimes when things look so bad, that's where a turning point happens, but I'm not even calling for that. What I'm saying is something has to happen that is unexpected that would be viewed as positive that switches. Otherwise, we continue on the path that we're on. There's no doubt about that. And like I said, everything from supply chains to the crude oil, the strength in the dollar is going to dominate everything. So anyway, folks, be careful out there. You're short, got those SQs, keep them on. But we're looking at one of those moments in time that they better shock and awe, or they better do something very quick. If they don't, and it can't be viewed, by the way, just kind of rambling on here for another minute, it can't be viewed as a pivot from the Fed because of the inflation situation. Like I said, this is probably the most complicated, complex situation that we've seen in the economies for a lot of years. We thought COVID was bad. Well, COVID was obvious because they shut down everything. This is something much different, and they managed to get painted into the corner, and the Fed's just screwed here, and we'll see what they come up with if they do anything. We're going to find out really soon, because the ECB on Thursday, like I said, watch out for joint statements, something that goes on, because this situation with the dollar has got to be stabilized. It can't just keep in this runaway market like we've seen. So anyway, folks, good luck trading tomorrow. Those of you in the live trading room will be there at 1 o'clock tomorrow, so I'll see you there. And have a good night, and make sure you like and subscribe to this video, subscribe to the channel so we can continue to grow. Thanks for everything, and make sure you get the indicators and links on the top. These things are really helpful in guiding you through, especially these treacherous markets. Anyway, folks, have a great evening. We'll talk to you soon.